Welcome to the Nifty Noon podcast, Curious Minds. Today, we're plunging into another deep dive, specifically into the dynamic world of crypto and digital assets. We're really focusing on the pivotal events and shifts that unfolded back in August 2025.
Yeah, exactly. We've pulled together insights from a stack of our Nifty Noon newsletters, covering August 6th, 7th, and 8th. And we've got our comprehensive market briefing, too. Our mission really is to extract the most important nuggets.
And connect the dots, right, across policy, market trends, and that fascinating NFT space.
Precisely, connecting those dots.
Get ready for some genuine aha moments because, look, this period truly marks a significant turning point for digital assets. We're going to show you exactly why it matters to you, whether you're already deep in crypto or just, starting to pay attention. Okay, let's unpack this monumental month. So we're starting our chronological journey with news from August 6th. This was a day that maybe subtly but significantly began to signal a potential thawing in the crypto winter, especially, I think, for the often beleaguered NFT space. This was front and center in our Nifty Noon newsletter, the one titled Billionaire Adam Weitsman Apes into the Other Side. What's truly striking here, and you really see it in the details, is the massive multi-million-dollar commitment from billionaire Adam Weitsman. He's set to acquire over 5,000 Otherdeeds, which are basically like digital land plots directly from Yuga Labs.
Yeah, Yuga Labs, the creators behind Bored Ape Yacht Club, of course, for their Other Side metaverse.
And that's just the initial move, right? He's planning to buy even more from the open market.
Right. And this is, look, it's more than just a large purchase. It's a really strategic play. It could genuinely recalibrate market psychology. I mean, the NFT market, as we know, has been in a prolonged downturn. So Weitzman's move is being framed as a potential beacon of hope.
A beacon of hope, yeah.
And what's particularly insightful, I think, is his contractual agreement. He's agreed not to sell any acquired Otherdeeds for multiple years.
Right, that's key.
It is. This isn't just about capital flowing in. It aims to provide stability, confidence to other holders. When you see someone putting that kind of capital in with a long-term hold strategy, well, it effectively legitimizes the asset class in a way mere price action can't. It signals a shift, from short-term speculation to long-term digital asset holding as a valid investment thesis, even for high-net-worth individuals.
And it wasn't just about the deeds themselves. The deal reportedly includes a commitment from Yuga Labs, too, right, to integrate their HVMTL collections.
Exactly. Another one of their NFT projects getting integrated into the Other Side ecosystem.
So that's a win for holders of those specific NFTs. Gives them actual utility in the metaverse.
Indeed. And this kind of strategic investment, even happening amidst a downturn, it suggests a deep, long-term vision from key players in the space. It's definitely something you should consider when you're evaluating the resilience and the future of metaverse projects. It signals that foundational building is still happening, despite tough market conditions. These digital worlds are evolving beyond simple collectibles.
And beyond Other Side, August 6th also brought us news from Pudgy Penguins, another, blue chip NFT collection making moves.
Right, Pudgy Penguins. Their parent company, Igloo Inc., launched Igloo APAC. That's about growing presence in Asia Pacific, which is, a massive market.
Huge. Plus, their token, PNGU, became tradable on Robinhood's advanced platform. That feels like a significant step for broader retail access.
Oh, definitely. Brings the token to potentially millions of new users.
So quite a bit happening in the NFT world that day.
And beyond these specific NFT and project developments, August 6th also saw some critical foundational shifts. In the broader institutional crypto landscape, Coinbase, for instance, raised a hefty $2 billion from convertible bonds. That's a popular method for growth companies, right? Securing funding, delaying stock dilution.
Signals strong institutional confidence, even with market fluctuations.
Precisely. We also saw Coinbase enabling PayPal integration for Canadian users, and MoonPay partnering with Getaxel. The goal there being to make crypto potentially replace traditional bank accounts.
Wow, okay.
These aren't isolated events, you see. They represent broader mainstream integration of infrastructure, setting the stage for digital assets to become, truly ubiquitous. Though it's worth noting there was a brief network disruption on Base Chain too, a small reminder of the evolving nature of this rapidly developing tech.
Right, always bumps in the road. So if August 6th showed us the sort of early signs of market resilience and infrastructure building, then August 7th brought us right into the heart of crypto's most pressing challenge, the ongoing battle for regulatory clarity.
Yeah, the regulatory front.
This was vividly captured in our Nifty Noon, Roman Storm's guilty verdict chills crypto devs brief. The trial of Tornado Cash co-founder Roman Storm, it saw a partial verdict, and that sent ripples, maybe even shockwaves, through the industry. He was found guilty on one count: conspiracy to operate an unlicensed money-transmitting business. But here's where it gets really interesting and kind of complex.
Yeah, the complexity is key here. The jury was deadlocked on the more severe charges. Conspiracy to commit money laundering, conspiracy to violate international sanctions.
Deadlocked, so not a full conviction on everything.
Right. But this split decision, even though it wasn't a full acquittal, has still caused significant concern from crypto advocates and developers. It really highlights the immense difficulty in applying existing laws often seen as outdated, to these new decentralized technologies.
And the core argument from the developer community is, well, that creators of non-custodial software shouldn't be held responsible for what third parties do with their tools, right?
That's the crux of it, yeah.
Yeah. So this outcome, even being partial, could have a lasting, maybe a chilling effect on innovation, especially for privacy-preserving tech in DeFi. So if you're a developer listening, or maybe just someone who values privacy in your digital transactions, what does this all mean for the future of secure private transactions?
It raises a profound and frankly important question about legal responsibilities. Who's responsible when you build foundational open source tools? This isn't just a legal setback. It forces a deep question for the whole industry. Does building a neutral decentralized tool inherently carry liability for its misuse by others?
That's a heavy question.
It is. It could accelerate the move towards fully anonymous protocols, maybe push innovation into other jurisdictions with clearer or more lenient rules. You could end up with regulatory fragmentation, harder for any single nation to control. It's really a precedent-setting moment. It'll likely shape how we think about legal liability in the decentralized space for years.
It's fascinating, though, even as the legal system grapples with existing crypto tools. The SEC itself seems to be looking ahead. Also on August 7th, our newsletter mentioned the SEC's Project Crypto under @CecPaulSac.
Right, Project Crypto, an initiative aimed at modernizing securities rules to enable America's financial markets to move on-chain.
That indicates a strategic, maybe even proactive, shift towards blockchain integration from a major regulator. It's a fascinating counterpoint to the Tornado Cash verdict, isn't it?
It really is. A bit of push and pull there. And speaking of future-proofing, let's look at institutional appetite. That continued to grow on August 7th alongside these regulatory things. Our newsletter highlighted that ETH treasury companies and spot ETH ETFs had each bought about 1.6% of the total ETH supply since early June.
Each? Wow.
Yeah. This isn't just random buying. It's significant, consistent accumulation. Shows growing institutional appetite for Ethereum as a core asset.
And Bitcoin saw increased exposure, too, on the 7th.
It did. The Michigan Retirement System nearly tripled its stake in the ARK21 shares Bitcoin ETF. That's a clear vote of confidence from a large traditional pension fund.
Tripled.
And Paratax's holdings announced plans to buy up to $640 million in Bitcoin for its treasury reserves. This just illustrates how large-scale strategic Bitcoin allocation is becoming, well, increasingly normalized for corporate treasuries, institutional portfolios.
So the big money keeps moving in.
And we also saw interesting stablecoin developments that day. South Korea's Kakao Bank, a major player over there, was eyeing one stablecoins. And reports have urged that China is reportedly set to allow the launch of its first crypto stablecoin.
China, really?
Yeah. So this global stablecoin activity suggests a sort of deepening integration of digital currencies into national financial systems, moving beyond just speculative assets to potentially becoming foundational financial infrastructure. It raises big questions about how traditional fiat currencies will interact with these new digital counterparts globally.
Okay, so that was the 7th. Now let's fast forward to August 8th. A truly pivotal day, almost an avalanche of developments, really. We covered this extensively in our Nifty Noon, our 401ks about to ape into crypto newsletter. This day brought some of the most impactful policy shifts we've seen. First, let's unpack the White House's direct interventions.
Right, the executive orders.
President Donald Trump signed an executive order aimed at clearing a path for alternative investments, and specifically including cryptocurrencies, to be part of 401k retirement plans.
Huge.
Yeah. This directive explicitly removes previous Department of Labor warnings that discouraged crypto offerings. The idea of crypto in 401k, I mean, that really changes the game for individual investors, potentially opens up entirely new avenues for retirement planning, stuff that was unthinkable just a few years ago.
This is, look, without a doubt, a major victory for crypto proponents. It could unlock the massive, what is it, $9 trillion 401k market to crypto,
9 trillion. Yeah.
potentially funneling significant capital into assets like Bitcoin, especially through those popular ETF products. If you connect this to the bigger picture, it suggests a massive shift towards broader retail access, bringing digital assets into traditional retirement planning for millions of Americans.
It certainly sounds like a monumental shift, but, one might also argue introducing a historically volatile asset like crypto into something as critical as retirement funds. Couldn't that expose everyday Americans to undue risk, especially given past market swings? How do you see the industry or regulators maybe mitigating those concerns? Or are we just accepting a new level of risk for potentially higher returns?
That's a fair and critical point, absolutely. The expectation, I think, is that this will primarily open the door to regulated products, like the spot Bitcoin and Ethereum ETFs we've been talking about. Those already have layers of investor protection, transparency built in. The industry itself is also developing more sophisticated risk management tools, educational resources. Look, volatility is inherent, yes, but the argument from proponents is that a prudent allocation, a small percentage of a diversified portfolio, could offer long-term growth potential. It's about offering choice within a regulated framework, you see, not a free-for-all.
Okay, that makes sense. Offering choice within guardrails.
Yeah.
And complementing that 401k order, President Trump was also expected to sign another executive order, right? Targeting politicized debanking practices.
Yes, the debanking issue.
Our newsletter even noted there might be a personal motivation here. President Trump was reportedly debanked himself by JP Morgan and Bank of America back in early 2021.
Right. And this signals clear support for integrating crypto into the mainstream U.S. financial system. It could help prevent legitimate crypto businesses from being cut off from traditional banking. It's about ensuring these businesses can operate within the existing financial infrastructure without arbitrary financial exclusion. It's almost poetic, isn't it? The very issue of debanking, which once seemed kind of niche to crypto businesses, now reaching the highest levels of government, directly influencing presidential policy.
Yeah, it really underscores how deeply intertwined crypto issues are becoming with mainstream politics.
Totally.
And alongside these major policy pushes, we also saw significant regulatory and legal clarity emerging from various corners on August 8th. The SEC and Ripple jointly dismissed appeals. That effectively ends their, 5-year legal fight.
Finally, a massive relief for Ripple and, honestly, the broader crypto market.
Yeah.
Removes a huge cloud of uncertainty.
Huge. And the Solana network explicitly stated that liquid staking activities and tokens are not considered securities. That's vital clarity for a major blockchain ecosystem.
Very important for Solana, yeah.
Our newsletter also highlighted the Senate's market structure approach as maybe the best path forward for crypto regulation. So lots of positive regulatory movements seemingly coalescing.
And with such a seemingly supportive regulatory climate forming, it's probably no surprise the market responded. On the market trend side, for August 8th, institutional Bitcoin exposure just kept growing. Bitcoin native asset manager Paratax's Holdings announced plans to go public and buy another $640 million in Bitcoin.
Another $640 million on top of the earlier plans.
Seems so. And BitBridge Capital Strategies also went public as a pure-play Bitcoin treasury firm planning BTC-backed loans. This signals a new breed of what the newsletter called digital asset treasury companies, DATKs, emerging.
The DATKs.
And get this, even a UK-listed company, Union Jack Oil, plans to mine Bitcoin on-site using natural gas. That just shows incredibly diverse adoption methods. Bitcoin mining finding synergy with energy infrastructure.
Wow, oil companies mining Bitcoin. Okay, and Ethereum, still showing strong growth.
Oh yeah, building on that momentum from the 7th, ETH treasury companies and spot ETH ETFs collectively bought about 1.6% of the total ETH supply since June. Consistent, significant capital flow. Companies like SharpLink, Cosmos Health, Fundamental Global Inc., they're launching major Ethereum treasury strategies, collectively stacking hundreds of millions in ETH. It's clear institutional conviction in Ethereum is rapidly solidifying.
And the network itself.
What's truly fascinating here is that ETH daily transactions hit an all-time high on August 8th, 1.74 million.
All-time high.
Yep. Indicates immense network activity and utility. And a prominent analyst, Tom Lee, you know him, even called for $16,000 ETH on CNBC. That shows increasingly bullish sentiment from mainstream financial figures.
16,000 ETH.
The combination of network activity, institutional buying, analyst price targets. It creates a powerful narrative for Ethereum's trajectory.
And in stablecoins, anything new there on the 8th?
Yeah, ProShares Ultra CRCA launched. It's the first ETF targeting 2x the daily returns of Circle's stablecoin, USDC.
Leveraged stablecoin ETF.
Exactly. This isn't just another product. It shows real innovation in the regulated product space, offering new ways for investors to get leveraged exposure to a stablecoin's performance, but within a traditional investment vehicle.
Interesting. Okay, any price-cutting themes wrapping up the eighth?
Well, finally, as sort of cross-cutting themes, we saw Oblong deploying $8 million in staked TTAs. That's locking up tokens to support the network, aiming to capitalize on the decentralized AI surge. This isn't just about AI. It's about building computational power, algorithm governance outside of centralized corporate control. A truly fascinating frontier.
Decentralized AI.
And perhaps even more significantly, politically speaking, President Trump nominated pro-Bitcoin advocate Stephen Miran to the Federal Reserve Board.
To the Fed. Wow.
Yeah. Further solidifying a pro-crypto stance within the administration. This indicates a growing governmental acceptance, maybe even endorsement, of digital assets at the highest levels.
So, okay, if we pull all these threads together from this whirlwind of August events, what stands out to you? What's the defining narrative of this period?
It's clear, I think, we're witnessing a pivotal moment for crypto in the U.S. Undeniable. On one hand, you have these executive actions actively pushing for broader access. The 401k integration, combating debanking, moves aimed at bringing digital assets squarely into the financial mainstream.
Right. Opening the doors.
But on the other hand, you've got the Tornado Cash verdict. It highlights the ongoing challenges of regulatory clarity, the potential chilling effect on innovation, especially for open source developers building crucial infrastructure. It's this tension, between enablement and enforcement.
Absolutely. And we're seeing significant institutional capital pouring into both Bitcoin and Ethereum, alongside strategic investments in the NFT space, even during a downturn. It's like the traditional financial world is simultaneously opening doors and grappling with the unique decentralized nature of this technology. It feels messy, but incredibly exciting. A convergence.
Yeah, convergence is a good word. This period just underscores that digital assets are undeniably moving from the periphery to the mainstream, whether the regulatory framework is perfectly clear yet or not. And for you, the listener, this means potentially new avenues for investment, for participation. But also, critically, a growing need to understand the evolving regulatory landscape and the inherent risks. Knowledge is most valuable when understood and applied, right? Especially in a rapidly changing environment like this. Every week brings new breakthroughs, new challenges.
Definitely. This deep dive really showed us just how much ground was covered in crypto and digital assets back in August 2025. From presidential executive orders to landmark legal verdicts, major institutional moves.
Yeah,
it's a lot to process.
Indeed. And given the rapid pace of all these developments, one has to wonder, how will the balance between fostering innovation and ensuring robust regulation truly play out in the digital asset space over the next few years? What kind of future are we actually building here? That's certainly something to mull over, I think.
Definitely something to think about. We hope this deep dive into our nifty news sources has given you a useful shortcut to being truly well-informed on these critical shifts. For more timely updates and insights, the kind that go beyond just the headlines, we highly recommend you check out Nifty Noon's X profile and subscribe to their Substack newsletter. Thank you for joining us on this exploration.